analysis for Tuesday, 13th of March. Now, let's just have a look at the prices and where prices may likely go. So we've had this continued move to the upside here and was somewhat indecisive, but slightly biased to the upside. For after which we did see this strong bullish buy-side momentum as initiated by this fairly large candle just here, breaking through, holding this major level of support in around 24,864, breaking above the 25,000. We did head down for, we didn't retest. What we did see was strong upside continuation up towards that the very next major level here in around the 25,439, from which we had a brief consolidation before heading up towards that 25,500. We did see a breakdown from the 25,500. Now, we came beneath the 25,439, retested, and we did see a very, a strong continuation candle just here, rather bearish candle, pretty sizable in its range, and we did see further sell side momentum bring us down. We didn't get down towards that 25,101. Instead, we turned around. Let's just see where our lows were. Instead, we pretty much turned around in around that 25,157. So around that 25,160 or so. We did see some bullish buy side momentum come back into the market, and we've had this slow move to the upside. Now, the move to the upside, even though it has been somewhat consistent here, we are operating in shadow of this bearish move downwards after having this strong move up. We're operating in shadow of this bearish move. Now, these candles, these bullish candles, which are slowly trending upwards, don't indicate a lot of conviction by the bulls. The candles are pretty small in size, pretty narrow in their range, suggesting that there is a degree of caution, or there might be just a lack of market participants. But there's a degree of caution here underlying the market, so we could potentially see prices break down further from where we are, unless we do see larger candles indicating that there is a degree of strength by the bulls and there isn't the bearish overhang that we have seen more recently still over this bearish overhang here, suggesting that let's rephrase that. So this bearish overhang that we've seen more recently, these candles suggest there is a degree of caution in the move upwards. If we continue to see this degree of cautiousness on the bullish side, we could potentially see bears re-enter the market and the market sell off further. If we do see a increase in the size of the candles, indicating that there is a degree of conviction by the bulls, could potentially see price head up towards that 25,439 up to test these old most recent swing highs here and around 25,500. Now, we do need to see these larger candles indicating that there is a degree of strength to the bulls to somewhat change our slight bias to the downside. Even though this most recent trend is to the upside, this would possibly suggest that there is a degree of bearish overhang, and we could potentially see a move downwards before seeing the upside continuation. Now, if we do see that bullish bias, I mentioned the levels to the upside, but if we do see that bearishness from this bearish overhang more recently, we are looking for prices to head down towards our 25,101, a break from which we're looking to see our prices react towards the 400 period moving average marked out here in black. A break beyond there, we're looking for price down towards that 25,000, maybe a psychological level in around 25,000. But if we don't find support at the 25,000 mark, we could potentially see prices head down towards the very next major level in around that 24,864. In around 24,864, we've also got the added confluence of the 200 period moving average, thus increasing likelihood of potentially seeing buy side momentum re-enter the market from there and retest these levels previously identified. So with that said, we've mentioned levels to the upside and the downside. We've expressed our concern about the degree of the nature of this bullishness that we are seeing at the moment. We've expressed a bit of concern about the degree of this bullishness, and let's just have a look at the daily chart to see how prices are developing here. I suppose it's going to be, so if we just remove our drawings from the chart. So what we did see was a bit of a pin bar posted for yesterday's the 12th. For the 12th, we did post a bit of a pin bar. I wouldn't say it's particularly bearish, but we did see a bit of a pin bar. Now we are interacting with a what moving average is that actually? So we're currently interacting with, it's definitely not the 200 period moving average, it's probably The 40. Yes, it is a 40 period moving average at the sitting at 25,325. But overall, as we can see here on this daily chart, there is a bias alongside. We've had a series of higher lows, and most recently, we've had a higher low, a pullback continuation, and we do seem poised for a pullback and upwards continuation. We'll just see how prices develop, whether we do see that deeper retracement due to the degree of caution by the bulls, or whether we do see that bullish buy side momentum come back into the market during a more active trading session. So we'll see how prices develop from where they are at present, but ultimately we ideally would like, if we are biased to the long side, if we're biased alongside larger candles similar to this over here on your left, entering the market, suggesting that the market will retest that 25,439 was it? Sorry, let's just make it up. 25,439 and the 25,500. Now, with that said, that pretty much wraps up the US 30 analysis. Thanks for watching.